It's great to be back with you on the second edition of the India Development Debate right here on ET Now. I'm Supriya Shrinate. Now, the government's efforts to prime the economy is gaining momentum ahead of the big economic review meeting tomorrow. The Prime Minister did meet Finance Minister Arun Jaitley and his team along with RBI Governor Arun Jaitley to draw up the broad contours of the government's measures. The Prime Minister's decision to take the driver's seat comes against the backdrop of a steady erosion in the rupee exchange rate, higher fuel prices and the weakening external situation. Apart from Jaitley, you did have the DA Secretary Subhash Garg, Finance Secretary Hasmukh Adia, Niti Aayog Vice Chairman Rajiv Kumar, PMESE Chairman Bibek Debroy, besides of course the RBI Governor Urjit Patel are part of this meeting. Ahead of the all-important meeting tomorrow, we put the spotlight on the priority areas that need immediate attention as the government looks to put the economy on the fast track. And joining us on this edition of the India Development Debate, a stellar panel right here, R. Gopalan, former Secretary in the Ministry of Finance, Anant Narayan, money market expert, Arvind Virmani, President Chintan Live.org, and of course Maithili Musnoorman, consulting editor ET Now. Thank you very, very much each one of you for being with us. And Maithili, if I may begin with you, it is none other than the Prime Minister himself who's doing the review of the macroeconomic scenario. So obviously expectations are running high. What announcements do we realistically expect against the backdrop and the circumstances this meeting is really coming in?
Well, frankly, the situation doesn't really call for any kind of panic reaction or knee-jerk reaction. So there's really no case for the government to rush and do something that they might later on regret. But even so, given the fact that there's been so much of a build-up about the meeting, I think it's only inevitable that the Prime Minister or some kind of announcement will have to be made that, you know, the government is on top of the situation and they're entirely in command, there's no need to worry, etc., etc. Because frankly, as we've already seen today, the rupee has recovered a lot of the ground that it had lost. And since the present situation is almost, I would say, 90% driven by external factors, and there's very little that one can do in terms of an immediate corrective action. The RBI has been intervening, and beyond that, the problem is essentially a structural problem with the current account deficit. So I would hope that the government does not do anything that is really show that it's panic stricken, because that could send a completely wrong signal. At best, maybe what they can do, which would not cause too much alarm, is to open a window for for the oil companies to buy their dollars from the Reserve Bank of India. Beyond that, I think just a little bit of talk saying that the government is command and will take action. Nothing more than that is either expected or warranted, I would think.
Right. Okay, not expected, neither warranted is the big word coming in from Maithili Musnoorman. But let me just take this across to the others on the panel. And Anant, if I may actually come to you. Actually, give me a minute. Let me just go to Mr. Gopalan and then I'll come to you. Mr. Gopalan, there are many factors responsible for this meeting. Whether it's a wider CAD, a weak rupee, oil prices that are climbing, threatening the fiscal position. Rupee, though, is the immediate trigger. Is it time, however, for specific one-time policy action? There is a lot of buzz in New Delhi, and unlike what Maithili might be prescribing, a lot of people are talking about FCNR. Is it too early for a move like that? Should it be reserved for later? Because when it was used in 2013, what one did see was that the rupee had actually slumped from 55 to 68. Our deficit position wasn't good either. Is it time to do FCNR? This is the big buzzword in New Delhi right now.
I entirely agree with Maithili. There is no reason to feel panicky about the situation now. Well, the whatever appreciation that took place, as Maithili mentioned, may be due to the announcement of a meeting. But you see, if you announce a meeting and if you are not able to take some decisions which the market expects you to take some very fast decisions or decisions of a very high caliber, and if you don't, I am sure that you don't have enough material in your armory to do that, then the market will feel disappointed. So these kind of meetings, in my view, are better done quietly, and what actions taken from that meeting are discussed by everybody else outside, whether it is the economic advisor or the Niti Aayog chairman or the minister or those who are who are the people who are responsible. Let them say that these are the things which we are trying to do. I would still say that for the time being, dollars for oil marketing companies for import forward forward sale, which happened in 2013, is a good thing to begin with. Well, the other thing is about the Punjab National Bank, that the other scam which took place, LUT, Now, that if it can be brought back in an orderly fashion, because if you see the BOP position, you will find that much of the erosion has taken place thanks to buyer's credit not forthcoming as it was in the earlier quarters. So, that is one area which you can look at, to take
Mr.
forward
Gopalan,
at this point in time. Beyond that, stick to fundamentals, stick to basics.
Okay. That's an important point that you make. We could perhaps look at the, the dollar advancements and all of that, but stick to fundamentals. Don't try and pull rabbits out of the hat. This is the time not to panic. We need a very firm hand on the tiller, like Swami says. But, Anand, I have to ask you this question. You've got the finance minister, you've got the RBI governor, the finance secretary, the revenue secretary, the Niti Aayog vice chairman, Bibek Debra, all in one room. Obviously, you fettered expectations. Did the government need to perhaps temper some of that exuberance? Because if there are no specific policy announcements come tomorrow or day after or Monday and only deliberations and a review, how disappointed could the markets be?
Well, Supriya, to be fair, I think the way in which the rupee was depreciating last week, ever since we saw the Turkish lira blowout, beyond which we saw rupee give way from 69 and rapidly move to 72 and then almost hit 73, and the sentiment for the rupee in the overseas markets every time the markets in India closed, something was called for. Because, if you allow, one thing is to allow a real effective exchange rate correction. But if you do it too rapidly and it starts to impact sentiment, then you have to be extremely careful, because let's face it, we have a lot of unhedged exposures. We have importers who are worried. We have people who've taken ECPs who've not hedged. Plus, we've got people like FPI who've put money in India and are worried about rupee depreciation. So you don't want all of them rushing out at the same time. So to an extent, something was called for. And I guess only using RBI reserves beyond a point was not useful. But it's like Maithili said, it's important that the right steps are taken tomorrow. There's obviously a huge amount of expectation which has been built up. You don't want something like an FCNRB scheme being issued right now. That's not required at all. We have plenty of reserves in the RBI. Maybe something cosmetic like an oil window, which is frankly not great, but will help improve the sentiment. What could be useful is some genuine measures to improve the real structural issue around CAD. The fact that we're importing too much smartphones, the fact that our exports seem to have real issues on the ground, that could be useful. The other thing which could be useful is a reiteration that we will take care of financial stability. We will not blow up the fisc. We will be extremely careful about maintaining, the overall financial stability, including the health of financial sector. That could be useful as well. But what we're hoping for, no panic, don't do FCNRB, not required right now.
Okay. They haven't panicked so far. They've not shown signs of panic, and one hopes they will be firm in their view on this. But Dr. Virmani, I want to shift the focus away from just the rupee and just the CAD and the points that Anant and Mr. Gopalan and of course Maithili alluded to the presence of the RBI governor in the preview meeting. I mean, this evening, the Prime Minister was locked in with the Finance Minister and also the RBI governor. Now, we understand that the mandate of the MPC is to manage inflation over everything else, even over the rupee. But is it foolhardy to expect RBI not to act on rates because inflation is under control at 3.69%? Many people believe RBI doesn't need to act on rates. But what about a widening CAD and a volatile rupee? Is a rate hike a given on the 4th of October?
Well, before I come to your specific question, let me tell you what we used to do. The last time we had a large increase in oil prices, or when we had crisis situations in Asia, etc., we used to set up an internal monitoring committee headed by the CA, and this committee functioned, even when I was there, and it had representative of RBI. The point was that as far as facts and information is concerned, the Finance Ministry and the RBI should be on the same page, and also on the issues which are of importance. I think it would have been useful if such a committee had existed for some time, but in any case, I think it can still be set up. I think it's more important to first get the facts and data right, to monitor it, to make sure that if anything untoward is happening, both are on the same page. Okay. Now coming to your specific question, so part of that was that this committee used to feed into the information when the governor and finance minister met, and occasionally when the governor met the finance minister. But the base has to be a common understanding. Now, given such a common understanding, clearly it's important for the finance minister, for the RBI governor, and for PM to look at the broad direction and be prepared for any future things. Now, on your specific question on monetary policy, I think on your show last time, I gave you a probability of more than 50% of a rise in interest rates.
That's right, you did.
But it seems like the prices have again come under controls. So I would reduce my probability actually, because there is nothing globally or domestically except for oil prices, which we have discussed before.
Okay, you will reduce your probabilities, the word coming in for Dr. Arvind Virmani. But Maithili, I will ask you a quick follow-up question. Amidst new concerns emerging for India's macroeconomy, we've got the Prime Minister's Economic Advisory Council that was set up with such fanfare meet only once since May. Did Indian economy take a back seat because it was all about elections and it is now coming back to occupy the Prime Minister's mind space due to fresh fault lines that seem to appear?
Well, I'm not sure the economy was entirely out of his mind, but yes, as a Prime Minister, particularly when we have so many elections around the corner and we just had major state elections coming up, I suppose politics does take the front seat also because we've got general elections looming ahead. But when situations like this arise, it's good to know that the Prime Minister kind of takes charge, as it were, because even though he would always be concerned about the economy, when he formally holds a meeting like this, there is a strong message that is sent out that, look, your government is concerned and they'll do whatever is necessary, and it has the attention of the highest. So that way it is, I think, sends a right signal, because it is important that you send the message across that the government is concerned, and especially about issues like fiscal deficit, about which overseas investors are particularly concerned, rating agencies are particularly concerned. It is important that the government says we are going to walk the talk and we will adhere to fiscal prudence. So I think it's a right move. But yes, as it's true that when you build up expectations like this, it's also important that the market doesn't feel disappointed. So the government will have to carefully manage expectations at this level, because we've seen the Turkish Central Bank raise interest rates to 24% today. But of course, we don't need to do anything so dramatic, because as everybody has said, our macro fundamentals are in very good shape.
Okay, hold that thought, because I'll quickly take it across to the fiscal space and also talk about fuel. Mr. Gopalan, this meeting is happening when the government is under pressure to cut fuel prices that are, of course, at lifetime highs. But does the government need to resist that temptation and keep oil prices unchanged? This is a middle class clamor. You know, cutting excise duty will not just put the fisc at risk, but what is the point, many say, of cutting taxes, because rupee depreciation will null that impact also? Will you advise the government to hold fire as far as fuel is concerned?
You see, the fuel prices, the taxes are VAT contributed by the state governments is also an important point for rise in fuel prices. So some states have started reducing. We must prevail upon all states, because they are getting additional 2,000, 2,500 crores per month on the way the prices have gone up. So I think they will be in a position to reduce rates further. I think every 1 rupee increase contributes some 2,000 crores a year for the states collectively, and therefore there is enough amount of money with them. They will be in a position to cut the rates. If they cut the rates, it will be in a position to reduce the prices. As far as center is concerned, they say there is a problem, because if they cut the rate by 1 rupee, the kind of the collection that will go down is talked of to be 25 to 30,000 crores. That's a huge money, especially when collections of GST are not really keeping with the expectations, and therefore states have to be compensated. Then there is a question of how you will be in a position to do away, and then also you convey the message that you are fiscally going to keep the fiscal deficit under control. So these are issues which have got to be taken with a fine balance, and therefore I think this is a very important decision. After due calculations, it will be done. But my view is that at this point in time, the center may have to hold because of the other considerations which I just mentioned.
Okay, I've just been given to understand that there is some big breaking news that we should be expecting right now. So you will, gentlemen and lady, you will have to be with us for a while, because I've just been told there's some big breaking news that's coming from this meeting. But very quickly, Anant, I have to ask you this. Isn't this also the time when the Prime Minister needs to use his political capital to push through fuel under the GST? You know, everybody's been talking about this. It's a go-to argument for both the BJP and the Congress. You've got governments in 20 states. It's time you use that political capital to do so. That's the right thing to do, will it not be? Right. Right.
You're right,
Anand?
Supriya, but it's a tricky one. As Mr. Gopalan was saying, it's a tricky balance. You're absolutely right that the GST should be, implemented at some stage and some parity should be brought in. But, let's face it, in an election year, given the external context and the domestic context, the government and the Prime Minister are juggling several balls in the air together. And it is a tricky situation. You can't afford to slip up on the fisc in this particular year, not when your external sector is looking so difficult, not when your financial sector is looking so difficult. At the same time, passing on the burden of oil prices to the common man, real political wise, is just not, it doesn't make sense. Plus, you must remember, over the last few years, ever since oil prices came down, the government has started to earn a lot of money between the state and the center. They earn more than 5 lakh crores per annum from oil prices alone. So, beyond the point, you can't pass on the burden completely to the common man. You have to sort of give some respite there. At the same time, you probably have to announce some kind of austerity measures. Charity begins at home, austerity begins at home. You have to take some cuts on government spending so as to ensure that the overall fisc doesn't blow up. And at the same time, your spending and your consumption doesn't go up at a time like this. So it's a tricky balance, but you're right. Eventually, at some stage, you have to bite the bullet and start to hold back the price rise on account of oil prices, and yet manage to manage the fisc maybe through some austerity measures.
Okay, hold that thought. Manage the fisc through austerity measures. I'm given to understand there is some big breaking news coming, and so I'm requesting all of you on air to please stay with us. As soon as that comes in, I will take it forward with you. But the Iran sanctions are due to kick off in November. Venezuelan supplies continue to fall, and unrest in Libya is also threatening oil production. Dr. Vermani, given the uncertainties, how misplaced is government's optimism when they don't expect crude oil to cross $80 to a barrel?
See, I think this meeting would have discussed oil, the entire oil situation. If you recall, in the last time the oil prices went up, there was a sharing mechanism between the oil companies, the government and price controls. Now clearly, because of decontrol, one does not expect the price control aspects to be changed, but I am sure they would have discussed both the issue of state ad valorem taxes, which as has been pointed out have been increasing in terms of total collections, and the other aspects associated with it. What decision they come to is speculative, but I am sure they will have discussed some futuristic, in the sense that if it does go above 80, as you have said, then what would they do? There is, from what I gather from talking to people, seems to be a lot of expectation in the middle class of holding, that somehow the prices have gone up too much since 2014. So it's clearly an issue, but the issue of fiscal deficits, etc., is also important. But there is a little bit of scope in terms of the state taxes, because they are ad valorem, to cut part of it. As far as GST concerned, again, there's a duality. There is no way at this point you can bring in diesel and petrol into the GST, but the rest of the oil products, to show that they are making progress, that people's expectations have become a lot, maybe as an indicator, something like that the government may try to do, but that also requires the GST council with the states represented. But that is one possible announcement I could see happening, because it's not really very disruptive either in economic or fiscal terms.
Okay, hold that thought, because I think the other point that is going to be discussed is investments and fresh capital, and why is that not taking off at a more accelerated pace. And Maithili, to you then, the war against NPA has certainly changed the rules of the game, not just for the borrowers and lenders, but how business is being done in India. But what it has also resulted in is what Arvind Subramanian very beautifully calls stigmatized capitalism. Now, you can call it lack of, or you can call it the very snail pace at which fresh investments are happening, is going to be a cause of concern. Do you realistically expect that the Prime Minister and the Finance Minister and the RBI Governor, who've met for a while now, can come up with something at this stage to unleash that animal instinct of Indian industry?
Well, that's going to be very difficult, because none of them really has a magic wand, and these are problems that are definitely more medium term solutions. So even though we do need to revive the animal spirits, at the moment, yes, it is true, bankers are very wary of lending, and in fact, but for the turmoil that we are seeing, we might have seen private investment take off, because we have seen capacity utilization has increased dramatically. So, there would have been some hope, but unfortunately, the entire uncertainty that we are seeing vis-a-vis the rupee, what it means for the fiscal deficit, what it means for inflation, all that is going to put a bit of a spoke in the wheels. So, at the moment, I do not see any magic wand as far as private investment is concerned, which is why it is important that government continues to spend, and at the same time, you are not going to be able to hold prices, oil prices indefinitely if oil prices continue to rise. So, it is going to be a bit of tightrope walking. Let us see, keep our fingers crossed and hope that oil prices do not rise dramatically. Then of course, we will have some reason to hope, but at the moment I would say nothing dramatic can be expected, at least as far as oil prices are concerned.
Okay, nothing dramatic as far as oil prices are concerned, but very quickly then, a last question, and Dr. Vermani, coming to you, obviously this has to be a realistic expectation of short sorts ahead of the economic discussion and ahead of elections 2019. There are two choices that have to be made: the choice between fiscal profligacy or fiscal restraint. It clearly won't be an easy choice to make for a government going into elections seeking a second term, will it?
I think given the fact that a lot of economists, macroeconomists were in this meeting, I think it would have been made clear, something which one has been saying, I am sure others have been saying, that in a period of global uncertainty about capital flows, the fiscal aspect, particularly the savings investment balance, which is I have repeatedly pointed out is more closely related to the revenue deficit than the fiscal deficit, but either way that is very important. So, I think most of the economists which he would have met today, or you are saying, I did not quite get, is he meeting them tomorrow also, but I am sure they would have told him that it is very important to keep the fiscal aspects in mind, and I suspect that he and the finance minister will listen to that. So, I do not I think there will be care taken. I mean, the specific thing which is on the table is of course the health insurance scheme which is introduced, but there are ways to introduce it and phase it in, so that there is no big jump in expenditure within the current fiscal year, and it is kind of phased out over time. So, I am sure they will keep that in mind.
Okay, hold that thought, because we are getting some important information on our screens. Why don't we just take a really quick breather and come back with that big breaking news? Please stay with us, Dr. Vermani, Mr. Argopalan, Mr. Anant Narayan and Maithili. I'm coming back in a minute from now, and we will put the spotlight on that big breaking news.